In this session, we will look into how to sell a credit spread or how to sell options using TWS platform or Trader Workstation platform of Interactive Brokers. So before we sell options, we need to do some analysis. If you have not seen my previous video on how to set up the Interactive Brokers TWS platform for option selling, check out my previous video. Here I have shown you how to set up this screen like this so that you can do all the analysis fast and do the option selling. Okay, so before we go into sell option, we need to look at do some quick analysis. So let's say we want to sell an option for Apple. So you search for Apple here. So what I'm doing here is I want all these in the same color so that when I change here, so if I change into Apple, all of them have to be Apple. So when you change this in the same color, all of them change at the same time. So I look at Apple. We are going to sell options. We want to sell options for Apple for next Friday. So let's say in 1 week. So what I do is I look at the dynamics of the price action. So I look at the price action for 5 minutes. Uh, so this we will get an idea of the short term here, 5 minutes and 15 minutes, and here we will get an idea of daily and weekly. Okay, so what we see here is in the weekly, it's okay. For a couple of weeks it has gone up, and then you will do some. Okay, here we have a very strong support layer here. Here we have a very strong sorry, resistance, and here we have the support here, and the overall trend also you see it's coming down. So we want to sell an option um, for in 1 week time. So what does this mean? We basically, this means to say that we want to make sure that our the strikes that we select is in such a way that the options the price action is in our favor. So for example, the what you see here is the price is going down. So if we take a put credit spread, there is a high chance that it will reach it will cross our strike, and we will go in the money. So if you do not know what is in the money and these basic aspects, check. There are a lot of resources in YouTube. I will also cover some of these topics in my other videos. So in order to sell the options, so here we see the daily price action here, and you see a strong resistance at 180 here. So it has been going down, and here you see it's went down after 180, it went up to 180, it went down again after reaching 180. So 180, around 180 would be a nice one. So this is daily price action, 1 2 3 4. So for the last 4 days it has went down. So I will look for around 180 in within 1 week. So what does this mean? It means to say that when we sell a call credit spread, we want to say the price will not go above 180 in then 1 week. That is what we are predicting, and according to that we are going to select a specific option strategy. Now once we know our view of the market, then we go to the option chain here, and then we go and take Apple. And if you go 1 week time, it will be 26th. uh, it will be 26th, will be next Friday, and it says we want to say price will not go above 180. But as you see, the 180, the price, the amount we get is very low, like 17. 17 cents. So what we need to do is we need to go maybe a little bit more higher up, let's say in 1 month time. So that will be let's say May 8. Go to May 18. Here we have, if you look at May 18, 180 price. If you take a call credit spread, it will get a little bit more money there. So how do you set a credit spread? In a credit spread, you need to sell one option and you buy another option to hedge your position. So what we see here is we are selling strike 180. You sell something and then you buy something at a higher one, so that when the price goes above this one, so we have another option to hedge our position. So we can sell this option credit spread on for May 3rd. So um, we take a price that is between this one. um, Say, let's say, um, here market is not open, that's why we don't see that. Let's just to show you, let's take the limit price 37. So you get a credit of 37 dollars, and then you submit the order. So this is your strategy. So your strategy is that the price will not go above 180. You are going to sell a credit spread for 180, and then you yeah, you selected the limit price, which should be like in the middle of the ask and bid price. You don't see this value because the market is not open, but you select the mid price, what you want to between the bid and the ask, and then you submit the order. Before that, you can also look at the profile here. Here you see, if you look at the profile, you see that the max return what you get is 26 euros for this credit spread. Profit probability 84% is a very high probability. Maximum loss that you will have is 223 when everything goes against you. And then you see the risk profile here. You get an idea of what risk you are taking, how much you can earn, and so on here. Now you just press submit order, and then you see in the orders tab, um, you see a buy. You have a buy option here. So this will be executed when the market is open. um, and here you also see the um, you see the line here. So this actually shows this is where you are going to buy the option. So until now we have seen how to execute a credit spread strategy. So this is one of the option strategies for option selling. In the next videos, we will see different types of option strategies, iron condors, iron butterflies, and so on. So see you in the next video.